Alright, welcome back to my computer everyone, and this is going to be my last video before the holiday break coming up, so hope you guys enjoy and find it helpful as always. Okay, so let us get started. Okay, the first deadlines I'm going to talk about is to do with personal tax deadlines, and there's only one you really need to worry about, possibly two depending on the level of tax you need to pay. So self-assessments are for all of your personal income between the 6th of April and the following 5th of April. So for example, this would be 2019 and this would be 2020 for the current tax year. The earliest date we could file a personal tax return or self-assessment, so if you've got things like dividends to declare, if you've got self-employed income, if you've got property income, whatever it is, earliest filing date is the 6th of April after the year ends. So for example, if we had the 5th of April 2020 as the year end date, the earliest day we could possibly file the return is the 6th of April 2020. And the deadline for this self-assessment for this tax year end here is going to be the 31st of January of the following year. So this is going to be January 2021. So if you kind of see where this is going. So you've got from the 6th of April of the year that ended to the 31st of January, about 9 months later. And in the case that you have a tax liability of £1,000 or more, HMRC will want you to make 2 payments on account towards next year. When I say next year, so this is, let's say you're doing the 2020 tax year end. So it ended on the 5th of April 2020, and they're going to want you to pay towards the tax year ending 5th of April 2021. And you'll notice that the deadline for this 2020 return is the 31st of January 2021. So even though it is technically a prepayment towards next year, you're almost paying it as the tax year ends in April 2021. So it's not as far in advance as you may think, but it is an advanced payment. So if you had payments on account, and they'll ask for 50% payments of whatever your tax liability is. So once you make both payments on account, you would have basically paid double tax, but one's for the current year and one's for next year because they think you'll earn the same amount of income. Hopefully that didn't confuse you too much. I know it's a lot to take in. It's a bit weird, but it's kind of how it works. And so you'll have 2 payments on account. One will due by the 31st of January, the same exact one as the actual normal payment for the current year is due. And the second one will be by the 31st of July, about 6 months later. I have a picture here for you that will explain it a lot better. So we've got the tax year start date here. It doesn't matter what year it is, but let's say for an example it's 2019. And we've got the 5th of April 2020 end date here. So this is the tax year end date, this circle here. So any income between these 2 dates will be added onto your self-assessment return. And you have from the 6th of April 2020, let's say it's there, to the 31st of January to finish this return and make your first payment on account, plus your actual liability. So the actual liability will always be due on the 31st of January. If you had to make payments on account, then there will be one due on the 31st of January and one due on the 31st of July. And these dates here are 2021 for both of these. So hopefully this kind of gives you a better idea of what the timeline looks like and when you have to do everything by. So 31st of January is the normal deadline. This deadline only happens if you have payments on account and you need to make that prepayment, like I said. So that's pretty much personal tax all handled. There's not much else to mention here. Okay, moving on to company filings. So there's about 6 different filings to keep in mind when you are dealing with a limited company. And this does not cover all of them, but this will be the most common types of filings that every company will need to do. If they're VAT registered, if they're running payroll, obviously these are optional things here. So if you're not doing them, then you don't need to. So corporation tax paid to HMRC. you've got the company accounts that need to be submitted to Companies House and HMRC. And this here, I mean, there's no point in doing it separate to the tax payment. I'll explain why it's a bit different in a minute here, but it's not too complicated at least. The confirmation statement, every company has to do this once per year. It used to be called the annual return, and as the name suggests, it basically confirms the information in the company as of the date when it was incorporated every single year. So who the directors are, how much share capital there is, who the shareholders are, all that sort of good stuff, and also their personal details. So if they changed address or whatever. Then you've got quarterly VAT returns. So if your company is VAT registered, it will have to submit these VAT returns. If you have a payroll scheme set up and you're running salary to employees, then you will have these payroll filings to do, and also the PAYE payment to HMRC for any deductions on that payroll. So let's start with corporation tax. It is paid once a year. So when you do the corporation tax return and find out what the liability is, then you'll have a corporation tax payment. And this is normally due 9 months plus 1 day after the accounting period. So let's say your year-end date for the company or the accounting period ends on the 31st of March 2019. If we calculate 9 months and add 1 day to that, you'll end up with a deadline of 1st of January 2020. So if HMRC do not receive your corporation tax payment by this deadline, it will be considered late, and they will basically charge interest on that late payment. So the first year will usually have 2 payments for corporation tax since it exceeds 365 days. And obviously the corporation tax amount, if you have 2 payments, then you'll also have 2 corporation tax returns. So this will always happen in the first year unless you literally shorten the accounting periods. It's really not worth doing that just to save the hassle of this, because it's not that complicated anyway, and if you've got a good accountant, they can do it for you, which, yeah, if you have our service, then we'll do it for you. So the next one is the actual company accounts. So Companies House will need a copy of your company accounts, and the filing deadline is 9 months after the accounting period ends. So this case, if we have the same year end date of 31st of March 2019, the accounts will be due by 31st of December 2019 as well. So it's just exactly 9 months. There's no 1 day extra or whatever. And this is the deadline for the company accounts, and there are penalties if you do not make this deadline. And HMRC will also expect their set of company accounts, which is submitted as part of the CT600 corporation tax calculation. And the filing deadline for this is 12 months after the accounting period. So you can see how it's a little weird where they ask for the corporation tax payment in 9 months, but the actual return 12 months. In the first year, you will have 2 CT600s to cover the entire period over 365 days. So same with the corporation tax payment, the CT600s will also reflect the 2 filings for that and split up the payment for it. So basically just forget about this whole 12-month deadline for the CT600s and just do everything in 9 months, because that's really easy to remember. So accounts to Companies House, accounts to HMRC, and payment of corporation tax to HMRC, 9 months deadline after the year-end date. So it's the easiest way to remember. Obviously, the first payment of corporation tax, if it's the first year and set of accounts to submit to them, will be a bit earlier because it'll be 9 months from the first 365-day period. So it's not going to end on the 31st of March. So let's say you incorporated your company on 5th of March. So on the 5th of March 2018, you incorporated your company. The first accounting period will go up to the 4th of March 2019. And 9 months from this date here, the first corporation tax payment will be due. So that's the only time where it's a bit sooner than the 9 month deadline, but roughly 9 months for all of these, and you don't have to complicate things with the whole 12-month CT600. The next one we've got here is the confirmation statement. So this is the previously annual return. So they changed the name of it to call it confirmation statement or whatever, because I guess people got confused with this and actual company accounts or something. So it recurs once a year from the incorporation date for the company. So if the company was incorporated on the 5th of March 2019, The earliest submission date will be the 4th of March 2020, and it will repeat each year on the same day. So literally it'll be just the 4th of March 2021, 2022, whatever. And you've got about 14 days to actually submit the statement after the earliest submission date. So if you don't submit it within the 14 days timeline, then Companies House will charge you a late penalty on that. And if they never receive your confirmation statement, let's say it's the first year's accounts, they may even start to close down your company, especially if they don't receive the actual company accounts either. So be careful of that. Make sure you follow your confirmation statement, because you don't want that to be happening. Okay, so quarterly VAT returns. You can actually choose the VAT quarter for your company when you set up the VAT registration. So normally what we do when we set up VAT registrations for our clients is simply to set it up based on the start date. So if they're starting their VAT registration from the 1st of December, then we'd probably look at having a return ending February, because that makes the most sense. Obviously, you've got a full VAT quarter there or thereabouts. So whatever makes sense. You've got 3 quarters here, and they go January, April, July, October. So these are all the end months of the quarter. You got February, May, August, November, and then you finally have March, June, September, and December. So you can pick whatever one works best for you. It doesn't really matter. If you don't want to pick one, then HMRC will automatically allocate you one. That's fine too. And depending on the VAT quarter you've picked, the deadline is always on the 7th of the following month. So what this means is, let's say you have that return ending February, then the payment and the submission will be due by the 7th of April. So this is the deadline. If HMRC doesn't have them by then it's considered late. With VAT returns for the first ones, they're often quite lenient on late ones, so they won't necessarily charge you penalties or interest on a late submission or payment, but they will put your company on a watch list for the next 12 months to check if you've made any more late submissions, and then so they'll either charge you a penalty for a late return or they'll charge interest on the late payment depending on what you're doing. And yeah, so be careful of that. That if you do get the first one a bit wrong and forget to file it, then don't panic too much, because HMRC are not going to fine you for that. And I've got a nice little chart here for our VAT deadlines to explain this to you a bit better. So in this case, we've got a return quarter for January, February, and March. So this period here will end on the 31st of March, and that's your VAT return quarter. Then it'll be due on the 7th of the following month, so not the 7th of April, but the 7th of May. They want to give you some time. For example, if you're doing invoice basis accounting, which is the normal way to do it, so you'll add in income to the company based on the invoice date or the tax point rather than when the actual money gets paid in. So it gives you kind of a chance to get those invoices paid before the VAT's due, and hopefully you get all of them in before you actually have to pay the VAT over to HMRC. So that's what that's for. And yeah, basically this will be every single quarter. So it's always due on the 7th of the following month, and there's no mystery there. All right, monthly payroll RTI submissions. So the submission date is ultimately up to you, but basically it's when you actually pay salary, because it's supposed to be real-time information in quotes. So this here stands for real-time information. Okay, so if you were to choose to pay your salary on the 18th of every month, then that is totally fine, it doesn't matter. So the last payment and submission date is on the 5th of the following month that you're actually running the payroll for. So it goes from the 6th of the month to the 5th of the following month. This is kind of like the time period of submission. So for example, if you had April salary, then it's supposed to be submitted anytime between the 6th of April, it could even be on the 6th of April, but that's a bit weird, to the 5th of May. And this is known as month 1. So it'll be like this for every single month. So the next one will be 6th of May to the 5th of June, and so on. So yeah, the date is up to you basically when you run the payroll, but it's got to be done by the 5th of the following month you're running it for. And if you're not submitting it by that point, then it's considered late, and you could get fined for that unless you've got a reasonable excuse. And finally, we've got the PAYE payments to HMRC. So how are these different to RTI submissions? Well, RTI submissions are done on a monthly basis, And while PAYE payments can be done on a monthly basis too, they can also be done quarterly, and that's normally what we recommend because that just means you have to make less payments to HMRC and you kind of get to keep the money in the business for a bit longer. So the PAYE payments are actually made from money deducted from salary. So if you had NI deductions, you had tax deductions from your employee's salary, then your company keeps that money in its business bank account, and every 3 months it pays that money over to HMRC. And that is what PAYE payments are. So this is pay as you earn. And these are due on the 22nd after the quarter ends. And these quarters run by tax year, they do not change. So they always end. The first quarter ends June, then you got September quarter, then you got December, and then March. So the actual deadlines for these payments, and there's no separate return to do for these because they've already been updated through your RTI submissions every single month, and you basically reported to HMRC what tax and national insurance is due from their salary. These deadlines are only if you actually have a PAYE liability to pay over. So it's going to be on the 22nd of July, and this is for the quarter ending June. Got 22nd of October for the quarter ending September, 22nd of January for the December quarter, and 22nd of April for the March quarter. And this is the final submission for the year. It's the 22nd of April. And there is a second deadline for things like P11Ds and benefit in kind calculations and all that stuff. You've got more time than the 22nd of April, but basically this is kind of when your company would need to pay over the tax and national insurance it deducts from your employee's salary over to HMRC every quarter. So earliest payment date for these payments is the 6th of July, 6th of October, 6th of January, 6th of April. So you'll notice that they go in line with these here, because if you pay before the 6th of the month, after the quarter ends, HMRC could think it's for a previous quarter, which is not necessarily good because their PAYE systems are actually quite terrible for tracking payments. And if they think it was allocated to a different quarter, then it may have shown as an overpayment in that quarter and it's never properly allocated to the next quarter as it should have been. And it just messes everything up, and then you have to call them about it and to get them to fix it and all that stuff. So for the most part, you'll be fine if you pay between these two dates here. So between the 6th and the 22nd of the month. So you'll notice that each period always ends on the 5th of the month in line with the tax year. So the actual tax year ends on the 5th of April, and the same with the PAYE RTI submissions. So that's pretty much it for company deadlines. I hope it made sense for the most part. There are quite a few of them to keep in mind, but VAT is easy because it's always the 7th of the following month. PAYE is also easy because it's always the 22nd. Accounts and corporation tax to both HMRC and Companies House are basically 9 months after the accounting period ends. Just remember that HMRC accounting periods cannot exceed 365 days, so if that does happen, you will have 2 periods, and it'll be 9 months due after the first period ends and 9 months after the second period ends, so there will be 2 deadlines that will be slightly different. So that is the gist of all the company deadlines and important dates to note, and hopefully that sheds some light on when things are expected to be paid or submitted or whatever. And overall, I hope you guys found the video useful. If you did, then feel free to click that like button. If you're interested in more content like this, then obviously consider subscribing. And I hope you guys have an awesome holiday and new year and get some time to reset yourself and get a really good fresh start in the new year. So thanks so much for sticking around and watching the video. Have an awesome day.